we had silver as some form of money. It was used by every major empire for the last 4,000 years, almost continuously, until just the last 50 years, which is incredible.
They now have to keep printing or we crash.
We've got this ticking time bomb.
Talking gold with the one and only Andrew Maguire.
Welcome to Live from the Vault.
All right, hi there. My name is Shane Moran, and I'll be your host for this week's episode of Live from the Vault. And welcome to the show that goes beyond the headlines and uncovers the truth about the precious metals industry and the effects on our global economy in these historic times. With exclusive access to experts and insiders, we reveal information and insights that you simply won't find anywhere else. Now, this week, we have the one and only Andrew Maguire, precious metals expert and whistleblower in the vault. And to help him pull back the curtain, we'll be joined by a first-time guest in the vault and, by popular demand, of course, by you, our Live from Vault community, Peter Krauth. He's the author of The Great Silver Bull. You're going to love this conversation. That's right, Peter Krauth is in the vault, and you're not going to want to miss this conversation. So just before we introduce you to our special guest and we head over to the UK, please help keep spreading the word about this channel by hitting that like button right there and share this information out. And also, if you haven't already done so, just subscribe. It really helps out the channel. And if you click on that bell, we will notify you in real time as each episode goes live. So with that, let me tell you a little about Peter Krauth. He is the author of The Great Silver Bull, and he's also a newsletter editor of the Silver Stock Investor. And Peter is based in Canada. And with that, let's head over to the UK and talking gold with the one and only Andrew Maguire and our special guest, Peter Krauth. Over to you, Andy.
Thanks, Shane. Welcome, Peter. It is so nice to have what we consider to be a silver specialist join us today. We have a huge silver following here, and I know that you're a welcome guest. So thank you for joining us today.
Well, it's my pleasure, Andy. I'm glad to be here with you, and I'm certainly looking forward to our conversation.
You betcha. And in fact, I'm obviously we're going to get to silver pretty quick. But you know what? As you say, a gift that keeps on giving. Look, basically, yeah. I was going to start by asking you. I mean, really, one of my focuses was, what about this CRE bubble? I mean, when's it going to pop? What kind of risks are associated with the small to medium term banks? And then, then this morning, Bloomberg hits me right between the eyes. And the New York Community Bank was just downgraded to junk by Moody's.
Wow.
And then, of course, this explains why Yellen was on the podium yesterday trying to soothe the market. So what's your thoughts here, Peter?
Well, like you said, definitely. Sadly, I think the gift that keeps giving, and we're getting close to a year now. A year ago, when we had that big issue with these banks, Silicon Valley, and then there was that contagion that spread, and ultimately that culminated across the Atlantic with Credit Suisse having to be, a forced marriage with UBS, and I was actually. By pure chance, I was actually over there at the time. And it was really, it really made waves. And if you look at exactly what went on and how all of that took place and how that acquisition by UBS took place and that, at the 11th hour, the Swiss government went and changed laws to make this happen. It's just incredible what goes on. And sadly, I think that that is one heck of a warning signal, a warning bell that we had about 10 months or so ago. I certainly do not think that has gone away, not in any realistic way. These banks are overextended. The effect of this dramatic rate hiking cycle, the most aggressive in something like 40 or 50 years, I believe has yet to play out. And people really should watch very carefully what takes place in this area.
Yeah, and we're already seeing it this side of the pond. I mean, this is going to trigger a global issue.
Oh, I think so. I think so. The US is the leader in many ways, and sadly, perhaps the leader with this as well. Yeah, I think that, obviously central banks around the world have acted similarly in terms of hiking rates, perhaps to somewhat of a lesser degree. But the effect has yet to, I think, play out completely. And I do think that there's a serious risk of contagion across the pond and around the world in terms of a potential banking crisis. So again, we have to really watch very carefully what happens here. That could be quite the trigger for the entire precious metals complex.
Yeah, and again, this is what this is all about. This is about education. This is about providing people information, and really, what are the ability to take responsibility for ourselves. Well, you need something. You need something to protect your wealth, and if things are coming down the pipe like this, then obviously that brings us nicely onto gold and silver. But Peter, you are a real specialist, a real silver specialist. So I think we're going to really reward our subscribers here. And perhaps we would start, and because often we take it for granted that, everyone understands silver, but really, could you actually start by running through silver's historical role as money and providing a little bit of background to what it is that really interests us in silver?
I mean, I'll do my best. So I don't know if your viewers know, but I wrote a book I published
Yep.
little under 2 years ago called The Great Silver Bull, and the idea was to give readers an overview of silver and the opportunity, and what I believe is a generational opportunity in silver in this precious metals bull market. And so what I decided to do, I didn't want to get academic. I tried to keep it as an easy read, a comfortable read. I have a lot of chapters, but many of them are very short. In some cases, 2-3 pages, just because I thought I wanted to touch on a given topic, give a quick overview of that topic, and allow the reader to have at least understood, okay, this impacts silver, the silver market, how to invest in it, and they've gotten that tidbit of information. And so, if we look at the history of silver, it was really discovered, we think, about 5,000 years ago, and then actually was used on a daily basis as money in some form, probably about 4,000 years ago. This would be in Babylonia, which is modern day Iraq. And they had a pretty sophisticated civilization and economy. They used silver and barley actually as a dual currency. And what they did was they counted 180 grains of barley and set that with an equal weight in silver. And ultimately, silver took over. Barley, will waste away over time, and it's not as durable. And eventually, we know that I think it was about 800 years or so BC that in Greece they started to fashion the first coins, and that would have been in a place called Ephesus, which is modern day Turkey. And these were Lydian coins, and they were electrum, so a mix of gold and silver. They were oval shaped. That evolved eventually into the Athenian drachma, which was just silver. And then several hundred years later, you had Alexander the Great, who, with his exploits and expeditions and so on, eventually introduced the silver, the drachma, to India. And that silver coin eventually became the first true international currency. And so I think, the lesson from this, what's really important for people to realize is that if you look over this sort of 4 or 5,000 years of history, money history, we had silver as some form of money. It was used by every major empire for the last 4,000 years. almost continuously until just the last 50 years, which is incredible that you could have this 4,000 year history with silver as money. And the last 50 years, it's been nowhere to be found in our money. We're really living in an experiment to have a fiat-based worldwide, reserve currency, which is, I'm going to say unofficially the US dollar, but certainly I don't think anybody would argue with that it's the dominant currency. And so we've been living this experiment, and odds are, if you look at what prior dominating currencies there were, going back maybe 5 centuries, you had the Portuguese, you had the Dutch, you had the Spanish, the British, and now the Americans. And each of those dominant currencies, world reserve currencies, so to speak, lasted about 100 years and eventually withered away, lost their purchasing power and were replaced. So we are, if you look at history and the time that the dollar has been dominant, we're getting on that 100-year mark. So, people certainly do need to pay a lot of attention to precious metals. I think that one of the big things people need to know about is something called recency bias, and understand it and understand the risks of it. And recency bias is people being led to believe that the near-term future will be very much like the recent past. And as we've seen with these black swans, all kinds of events that are unpredicted, so to speak, and change the scenario and the narrative almost overnight, that can be dangerous to have recency bias. So, I mean, I've gone on for a long time now, Andy. That's my sort of take on silver as money and the evolution and what people need to take from that.
Peter, that's really excellent stuff, and I think sometimes we just don't look at what it really is, where it came from, and its history. And I think a couple of things jumped right out of that at me. Was, my God, you were talking about an equal weight of barley to silver, and I mean we're talking about an equal weight, and then it just made me suddenly think, my goodness me, just where did 92 ounces of silver to buy 1 ounce of gold come from, which is what I saw this morning, just tagging it. What a ludicrous situation. And I think I'm going to ask you to comment on that. But I'm just wondering, you also mentioned, 50 years ago, it stopped being used as money. But that it's almost coincident then with the launch of the COMEX and the dilution of, well, certainly gold, and the dilution of paper, where you can cash settle contracts with no delivery. And I just wondered if maybe that's a reason that we got this bubble, this siloed bubble, of ludicrous bubble of a 92 ounces of silver, when really what I always figured it was really more closer to 8 to 1. I don't know. What's your thoughts?
I completely agree. I mean, even if you just look at the average of the last, say, 40 years or so, we should be much more somewhere around 60, which at today's price for gold, so, let's use easy numbers, gold at 2,000, a 60-to-1 ratio would bring you to $33 silver. That's more than a 30% gain at this point, which would be tremendous and would suddenly make silver producers very, very happy, very profitable, and would change the dynamic, and certainly I think make people revisit their recency biases, as I just mentioned. And I mean, obviously, silver at $23, a lot of people are unhappy about it. It's not realistic, and yet it is already about 40% above where it was. If you look at, say, about 2 or 3 years prior to COVID, so say 2016, 2017 to 2020, silver in that time frame averaged about $16, $17. We're at about 40% higher than that. And I think we're going to see these step changes. Now, the step changes, I think, come from shocks. And in part, COVID is a perfect example. COVID created the shock that brought us up to this newer, higher level in the silver price. It's investment demand, clearly, that creates these spikes. But I think that, once you get these spikes, although the price does tend to dial back, it typically does not dial back to its pre-spike levels. So it brings it back, it comes back down, it goes back down to a new, perhaps lower level, but substantially higher than prior to the spike. I think that, a falling ratio in the gold-silver ratio is actually bullish for both metals. And we've tended to see that over time. So silver would catch up to gold, but we would also see typically gold rise under a falling gold-silver ratio, which actually is even more bullish for silver, because if the ratio average, let's say we looked again at 60 to 1 would have us at 33, that would mean gold at 2,000. But I've heard very conservative predictions for this year for gold to reach somewhere around 2,200, 23, 2,400. That would just, even at a 60 to 1 ratio, that would have us probably somewhere close to the high 30s in the silver price, which is just tremendous from current levels.
Yeah, absolutely. And it's interesting. I don't know if you saw, I think it was only day before yesterday, the LBMA issued their 2024 silver forecast, and I mean the variance was enormous. I mean, they were predicting massive price volatility. They're talking about a $14 range. I mean, now I'm going to apply some color to this in a minute, because they're talking about a range of $18 to $32.
Wow!
And when the trading range last year was $6, like pretty much now. But to me, this disingenuous club of so-called professional traders are trying to spin that such a volatile price range would be normal.
Right.
But of course, because that is the game that's played inside what I call the casino, this casino bubble, where it's not a physical market at all. And I think what's interesting to me is what they haven't factored in, and because what we're doing a lot of work with, we have a lot of insights into what's going on in China, in Russia, with gold price revaluation is almost certainly on the front burner. In fact, we did an episode last week or 2 weeks ago where we illustrated how the ex-Treasury official for the US had estimated $3.4 trillion of Chinese FX reserves were in the shadow banking system on top of the 3.4 trillion that they officially disclose. And this is where we dig deep and work with our first-tier liquidity providers who are exposed to these markets, who've simply said the bulk of this has and is being converted into physical gold. And so therefore, it isn't rocket science to really assume that we will see a gold price revaluation. Now, whether it's done because of geopolitical events, whether it's done because of another weaponization of the dollar, maybe a change in political situations, could be a problem in the South China Sea. It could be anything, but there'll be a point where we think that certainly Russia and China are going to disclose where they're aggregated 60,000 tons between the two, are going to really be able to back their currencies, and also to back the Glasnev's gold-backed currency, which we have evidence or information on is due to be launched. So what I'm saying is, these silver guys, when it relates to silver, if there is a gold price revaluation, I mean, even Saxo Bank, without that, reckon $3,000. And believe me, they're the most pragmatic guys I like Ole Hansen. He's very pragmatic, and he's just talking about 3,000 gold would be the floor. You've mentioned 2,400. Yeah, I mean, absolutely. I mean, in fact, LBMA even talk about 2,400 in their gold price. So it's interesting. But if we do see a gold price revaluation and gold is at $2,500, $3,000, then where does that put silver? Because there's these so-called professional traders, I don't trust at all, who live in this bubble. They're not gearing up for a gold price revaluation, and this could really break their hold on silver, in my view.
I mean, I completely agree. And I think that one of the things that people underestimate is what a revaluation, a considerable revaluation in gold would do to silver. And here's just one aspect of it. You know, there's a lot of people who just sort of chase momentum. And, we're seeing that with tech, we're seeing it with AI, with uranium, for example. And in the case of some kind of a gold revaluation, let's say $3,000 gold, you have to imagine that naturally it's going to garner a lot of attention. And that attention will be driven by FOMO, right? A lot of people will feel like they've missed out or they're worried about missing out. And what's going to happen if it goes to 4,000 or 5,000? And people start thinking this way. So they look at gold, let's say at $3,000 and say, wow, 1 ounce of gold would set me back $3,000. What else is out there? What else can I do? What's an alternative? And silver is that natural alternative. It has been money longer than gold. It has, to some degree, helped to protect against inflation, like gold has for centuries and millennia. And even at, say, $50 or $60 an ounce silver, it's going to look a whole lot cheaper than gold will at $3,000. And I think that if people think that gold can, be driven higher through this phenomenon, this FOMO phenomenon, just think what it can do to silver, which goes through these periods of consolidation and then absolutely explodes higher. And if you look at what it did both times that it spiked to $50, I mean, it was really you had I'm going to say more than a doubling in a matter of months. And so that really gives you some idea of the kind of drive that and attraction that silver will have, and the potential is just phenomenal. And silver has done its share to protect against inflation. I remember doing some research on this a while back and looking at, I don't remember the exact price for silver if we look back. I said let me look at a century and look at the price of silver using the official inflation rate in the US. So whatever the price of silver was back in 1923, and then I used the official rate of inflation. Let's say that was somewhere around 2.5–3%, and that brought the price of silver to around 11 or 11.50 US currently. And so we're at more than double that. Now, of course, you can look at what silver's done. It spiked to $50 twice in its past and say, silver has not kept up, but it has actually, if you consider at least, and I'm not saying that we should, but if you consider at least official inflation rates around 2.5–3%, silver's more than doubled that over a century. So it's done its fair share in terms of job of protecting against inflation. And it's a fantastic vehicle. I think that volatility is actually something that people should take advantage of and not let it scare them away from silver. People need to understand it, understand how it behaves, and take advantage of that. And I certainly talk about that a lot in my book in terms of how and when you would position in silver stocks, sell partial positions to lock in some of those gains. Really, this is a a great way to diversify a portfolio. There's all sorts of research and stats. I could be spewing that stuff out all day long.
Yeah, and as we see these CTAs really operating in this, which I was convinced is just a bubble world,
Right.
And really they're just chasing a dot on the screen. I mean, to them, no view into the physical market, no view into the wholesale markets. I mean, silver could to them be 100. It could be $1. You know, it basically, it means nothing to them. It's just a dot on a screen. And so what's interesting is that there was a little Bloomberg piece about a month ago, which came out, which said, 75%, CTAs control 75% of all the oil markets. And also referring to the same group of traders controlling the gold market. Well, of course, they didn't mention silver, but of course, it's this same group of momentum traders you just talked about that really chase price around. But when oil went to zero, nobody wanted delivery.
Right.
They didn't want it dumped into their swimming pool. But essentially, this is the kind of volatility you're talking about. So I think I would think that you would advise people, when you just said, take advantage of this volatility. So if you are a stacker, a physical stacker, then really, what would your best strategy be?
Well, I mean, at these kinds of prices that we have today, historically low, historically undervalued, the gold silver ratio is a great indication. The inflation adjusted price is a great indication. The Dow to silver ratio, the average US home price to silver ratio. I mean, I talk about all of these things in the book, and what actually surprised me when I said, okay, let me come up with a long-term forecast for the silver price. And I said, I don't want to be sensational. I'm going to be what I think is fair, realistic. I'll look at what has happened in the past, where silver went. And to be fair, I'm talking about a scenario where we have ultimately a full-blown mania phase, and silver gets driven up dramatically. And I believe this would be perhaps towards the end of a long-term secular bull market. And I looked at these same ratios that I mentioned: gold to silver, Dow to silver, US average home price to silver ratio. And when these ratios bottomed in 1980, if we were to use what I believe is a realistically ultimate peak, let's say, in the gold price, conservative in my view, but say $5,000. In each of these cases, these different indicators, I got a $300 silver price target. And I know that, again, as I say, to some that sounds sensational. I've heard some people who have a very long history in the commodities markets, have managed billions of dollars, and I've heard targets that are even well above that. So it makes me feel more comfortable and more realistic, and not so sensational about that forecast. I just think that it's realistic. If you look at those ratios, you look at the other side of the ratio. Ultimately, in almost each case, you had somewhere around, say, the high 200s to the low $300 price range for a peak in the silver price. So, I think that that is something that, again, in a blow-off mania phase, we could ultimately look at in terms of a peak in silver.
And I think those kind of numbers are very realistic. And I think what's interesting is some very smart money. And I'm talking about old money here too. And I'm talking about, and so we have vaults in Liechtenstein. And so in that vault there, got talking to one of the investors there, who is a silver. He invests in silver. And I said to him, and looking at the vault, and literally pallets from floor to ceiling it has to be done on the base floor because silver has to be stored low down because of the weight, and literally had pallets and pallets of 1 ounce silver coins. And I said, but you're crazy. Why don't we just get you some 1,000-ounce bars? And he said, but Andrew, you need to understand something. He said, when things blow up and when things get, and when gold goes up, what am I going to do with an ounce of coin? It's going to be worth too much. An ounce of silver is the perfect amount. It'll buy me, I will be able to use that for everyday purchases. And he's talking about if the worst happened.
Right.
And so I thought that was good education for me. That's smart money. And this is going back years. So, and of course, this is going to also make silver very difficult to store, because right now, if you want to insure silver in less than a grade 10 vault, you can do that now and get insurance. You get silver over $50 an ounce, there's nobody going to touch insurance on anything under a grade 10 vault. And so it changes. What is Brink's going to do? What are Loomis going to do? What are all these people who store silver are not going to be able to insure it? It's going to be so higher value. There's so many dynamics going on here.
That's a great point. I mean, I know in two cases, actually, I'm going to keep them anonymous, but in two cases of large companies that have vaults in different jurisdictions. And I know in one case, they've actually built a new vault. It's triple the size of what it was just recently. And in another case, they're building one of the world's absolute largest precious metals vaults. And it's probably going to open this year. So, and despite that, I agree with you. Much higher silver prices are going to just throw all kinds of things out of whack. This goes back to what I was saying before, recency bias. People are not thinking, not preparing, not thinking outside the box and considering what kinds of things could happen, and running these stress tests in terms of their businesses and see what it could mean, and what kinds of sort of backup plans they could have for these kinds of events. You really have to wonder, how people manage these things. It can really drive things haywire at some point. But this person that you were talking about who has 1 ounce silver coins, obviously, people will look at that and say, well, that makes no sense. He's paid so much over sort of the silver content in order to get these coins. But I would bet you that he bought that long enough ago that the premiums were not anywhere close to what they are today. I actually know someone going back about 15 years who told me that he was buying Canadian 1 ounce silver maple leafs that were trading, and I kid you not, they were trading below the face value, which is $5. He was buying them for $4 and change. And he was saying, Peter, I mean, it was an absolute no-brainer. I could not lose. I could turn these in and automatically get more than I just paid for it officially. And obviously he didn't sell them. He knew where precious metals were going. This would have been in sort of the mid 2000s or so. But these kinds of opportunities come up very seldom. And people really do need to pay attention. And you're not going to hear about these opportunities in mainstream media. And, again, one of the things I do talk about in the book is that when, if you look for indicators as to when we may be peaking in some kind of a blow off phase in precious metals, for example, and I have, other ideas about how that might play out. But in terms of indicators, one of the best ones is, seeing, for example, gold talked about nonstop in daily financial media, silver being talked about daily in financial media. Right now, that's nowhere to be found. And so when we do get into that kind of scenario, then, started potentially looking for an exit. And if nothing else, at least a partial exit. And I talk about that as well in the book. it doesn't have to be an all or nothing kind of decision. If you feel like we are at or near that kind of a peak, you can also, well, if you're uncertain, you can also do this in a phased way. You can say to yourself, okay, well, whatever my position is, I'm going to sell a quarter of it. I'm going to sell a third of it. I'm going to give myself weeks or months to watch how things play out and be able and willing to react quickly if necessary, and sell another portion. So again, it doesn't have to be an all or nothing kind of scenario, but I know that in the around the 1980 point when silver peaked, there were lineups that went on for blocks and blocks and blocks for people who were looking to buy physical silver, to buy physical gold. This was the FOMO effect. Today, you might get that to some extent. I think that we're going to see that's going to be much more a better indicator, because especially sort of younger investors are going to find an easier way, is going to be probably the indicator, the ETF indicator. And when you see volumes build and build and build and start to double and triple and so on a daily basis, that's when you really need to start paying attention. That's going to be sort of the fast money coming in and probably eventually leaving also just as quickly. Those will be very good indicators for an ultimate peak. But I do want to say one sort of last thing about that. Depending on how everything plays out, I would not assume that an ultimate peak, especially if we're heading into some kind of a currency reset, where it looks like, despite what central planners' wishes are, that, because I think they will resist in every possible way, having precious metals become some sort of money again, or backing money, because there's a lot of power that comes with fiat currencies. So that will be a last resort, but it doesn't mean it won't happen. If it happens, then I think that although we could, we will likely make our way into some kind of a mania phase, and then things will back down and correct again, I don't think corrections will be anywhere close to where we are today. And so people may not want to ultimately sell out completely. They may want to, at that point, continue to hold some sort of a base position that would go on perhaps for the rest of their lives at that point.
Yeah, and I think a couple of things pop out in my mind about that. Is that, yes, we both know clients who many years ago bought silver, and we also know that people are buying it today. But when you think about it, I mean, really, the most undervalued commodity on the planet Earth. There's little doubt about that. When we look at this in the rearview mirror, and I think this is what's going to happen, is people are going to move on from today. And this is where we need to take action. Now, when you look at the silver price today, and you know that it's diluted, and you know that it's not the real price, it really isn't rocket science to say, well, really, maybe I should just really continue to stack, add some. I mean, in the rearview mirror, I think what people are going to kick themselves when they see silver in the 50s, the 100s, 200s, 300s, because they had every opportunity. And it'll be a bit like when Bitcoin first launched and people said, oh, I wish I'd bought it then. This is real. This is here. It is available. It is available to anyone. And there's not even a premium right now on the retail market. People are going to kick themselves if they don't take advantage and at least just average some in. I mean, there's nothing to lose. As you say, a little bit of volatility. If you don't need to cash it in right away, I mean, this is wealth protection to me, that it's right in your face. You don't have, if even people who can't afford to buy ounces of gold can buy ounces of silver today in the low 20s. It's unbelievable to me.
I completely agree. And I think that this is money for the masses. This is the kind of thing that, as you say, almost no one can say, they can't afford a little bit of silver. And anyone who's never held, a 1 ounce silver coin, some kind of a sovereign minted coin, I think that it's a little bit magical. They should buy at least one, hold that in their hand, take their time, look at it, get a magnifying glass, look at the precision, look at, it's almost a work of art when you see what these things are and the tangibility of it. It's really quite really something special, and it's wealth preservation forever. It really is something that people need to have in their back pocket. We haven't even talked about the industrial demand for silver, things that are going on in that space. I don't know if we've got the time to go into that a little bit,
Sure.
but I can.
Yeah.
Wonderful. So I'm just going to give a quick overview. I don't want to get too detailed with this, but what we do know is that over the last, say, maybe 10 to 15 years, for the most part, silver was about 50% industrial use and about 50%, I like to say, investment use. And in there, I include things like physical investment demand, so bars and coins. I include silver jewelry, and I include silverware. So for me, that's all physical investment. And then the other 50% is industrial. And that's things like electronics, switches. You find it everywhere. It's in medicine. For example, in cornea replacements, they put silver nanoparticles because silver is a natural biocide. It will actually kill bacteria, and the bacteria never grow accustomed to it. So it always works. It's been known for centuries and millennia to work as a biocide. So then you've got it's in 5G, telecommunications. It's more and more present in electric vehicles. You find it in electronics. You find it in EV chargers. But the single biggest use industrially for silver today, and I think if people want to follow really what's going on in the silver markets and things that are besides the investment side of it, is solar panels. That has just been a massive driver for silver demand. Just a couple of years ago, it was about 15% of the entire silver market every year. Last year, it already grew to 20% of the entire silver market. Industrial demand is about 630 million ounces. The Silver Institute thought that silver was going to represent about 160 million ounces out of about 1 billion ounces a year market. It ended up underestimating. So the Silver Institute said silver would be about 160 million ounces. Sorry, they said solar would be about 160 million ounces of the entire silver market last year. This was back in April or so. And then I had said by mid-year, I said, that's too low. We're looking at 180 to 190 million ounces would go to solar. And when they revised their numbers back in November, they actually said, yes, it would be 190 million ounces. So I was much closer to the higher end and proper final number. But solar is just dramatic. New solar technology is actually requiring more silver per panel because those panels are now more efficient, and new technologies are requiring 50 to 150% more silver per panel. So I think that we're going to see silver going to solar become an even bigger part of the silver market this year. And I like to say that industrial demand for silver, which has grown from the last few years ago, about 50% of the market, and now we know officially last year is above 60%. I think we're going to see that maintained and continue. So look, solar is forecast by the International Energy Agency to surpass coal and natural gas as the largest way of generating power worldwide, generating electricity by 2027. That's just 3 years from now. So if solar becomes the single largest source of power, that's going to just require more silver. And as I say, these new technologies require even more silver per panel. So solar really is industrial provides a rising floor under the silver price, and I think that is the investment demand as it comes in, somewhat unpredictably from time to time, sporadically, is what creates these spikes in the silver price. And that's where I think that is that opportunity for people to, as you said earlier, get in now. It's quiet. Things are stable. Downside, very minimal to nothing, in fact. And sit there, wait, take advantage of that lack of volatility right now. The volatility is likely to be on the upside. I like to say too that, we are much more likely to get negative supply shocks than we are to get positive supply shocks. I study the whole mining side of things. My day-to-day is my newsletter, Silver Stock Investor, where I talk about everything surrounding silver, how to invest in it. But for the most part, the silver stocks and the equities, the mining opportunities in this space. And silver is very difficult to find. 75% of mined silver is actually a byproduct. It's not the main product of those silver miners. Most silver, 75% of mined silver comes as a byproduct of mining copper, gold, zinc, and lead. So only 25% of the mined silver is from what we call primary silver mines. If there is, I should say, when there is a recession, and we have the risk of slowing down base metals production, that could exacerbate silver supply. It's likely to exacerbate silver supply. So imagine, silver supply is inelastic to its price, meaning you could have the opposite reaction. If the silver price goes up, it could be under a scenario of recession or a negative, economic scenario where base metals production goes down, actual silver supply goes down under a higher silver price. So you could get that driving silver even higher because you have less supply coming to market. There are so many dynamics in this market. It's amazing and it's fascinating. And I think that, people wonder what could happen. These are just the kinds of, a quick overview of the kinds of things that can happen that can really ultimately drive silver volatility. Supply shocks on the negative side, in terms of silver supply, we've seen Mexico, for example, the world's largest silver mining nation by far, saw its production last year go down 12%. We saw Peru, which is arguably the world's second largest silver producer. It's been falling for the last 7 years. Silver production has been coming down for 7 years. It's now at levels that go back 20 years in Peru. Bank of America did a survey that looked at the world's 13 largest primary silver miners and asked them their opinion on terms of supply coming to market, mine supply. And they said the consensus was the peak in silver mine supply, which was in 2016, 900 million ounces, is not going to be revisited anytime soon. We're down to around 830 million ounces. That's well below the average, and yet we're at much higher silver prices than back then. So silver is a difficult thing to find and to mine. We're not making it easier. It's not getting easier. All of this will exacerbate supply and just drive prices ultimately higher.
You raised some amazing points there. Absolutely. As you say, the solar silver miners are not the primary producers of supply of, and so this is interesting. And also, when you talked about all this solar panel production, and then that and the increase in it and the increasing amount of silver that's required, but also the amount of extra volume of demand for it. Well, really, what's going to happen is that each one of those production lines cannot afford to be without 1,000 ounce bar. And so what will happen is, as what we currently see, is one of the reasons that we often see people not understanding the supply demand side of things is, for example, one thing, no matter, even through COVID, when suddenly mine supply contracted, one thing that was made sure was the guys controlling the paper price made sure that Samsung, Apple, and all those guys that were making stuff out of silver made sure they got their 1,000 ounce bars while no one else could get any. And the reason is because the minute you tip that, you tip that balance over, what's the first thing you're going to do if you're threatening to shut down an entire production line? You're going to stock up. You're going to race out, and everyone at the same time is going to buy 1,000 ounce bars. Well, what do you think? There's going to be a price for them, and yes, they'll get them, but what will that price be? And you can't afford to shut down a line. So it's interesting. You're talking about a number of things coming together here into a supply shortage. And to me, this is all the more reason. And I think people hearing you, Peter, really, basically, people should come and join you. And this is a wealth of information. They should come and join you on your platform, perhaps join your service and look at it and your book. And I think, this is something that you're not going to get this kind of information. You have to be a specialist to know this stuff. And a lot of people just don't have the time. And I think, so really, I would strongly suggest that people do come and visit you and come and find out more about silver and maybe make good decisions in their lives about buying something that is already produced, that has no counterparty risk, i.e., the dollar in your hand has a counterparty risk. It's being debased every day. But the ounce of silver you buy, or the kilo of silver you buy, has all the energy put in it already. It cannot be worth less than the energy that was put into it. And I mean, goodness me, everything I touch, even my desk here, it's simply because of money debasement is going to cost more to make that desk, going to make more to make this computer, going to make more to make to produce gold, silver, and every other commodity. So, really, all I'm saying is, guys, listen.
Yeah, I mean, Andy, a couple of interesting points come to mind as I'm listening to what you've just said, and if you don't mind, if I may go back to sort of the supply demand just quickly again, the last 3 years have had a supply deficit in the silver market. And so if you add those deficits together, we're looking at 500 million ounces of silver. Now, that's equal to that's half of an entire year's silver supply, which is about 1 billion ounces. So, of course, people are asking themselves, how can you have these supply deficits and how can they go on like this, multiple years subsequently and consecutively? And also, the Silver Institute is forecasting that we're going to have these supply deficits continue for several more years. They don't know how long. They are expecting another deficit again this year, about 100, I think, and 70 million ounces or so. And so people are asking themselves, where is this silver coming from? And my view from looking at all of this, the best explanation is that, and here are some clues. You have to almost sort of read between the lines. One is that silver ETFs have seen, for the first time the SLV has been around since 2006. For the first time, almost continuously for about 2 or 3 years in a row, we've seen the silver held by the ETF drop considerably. Same thing has happened to the gold ETFs for a different reason. But so that's one source. If you look at COMEX, if you look at London Vault, if you look at Shanghai, all of these futures exchanges have had more and more silver drained out of them. That's, in my view, because there's a lack of supply. And so if you are a big player, some kind of solar panel manufacturer or whatever it might be, a Samsung or anyone who uses a lot of silver, Apple, for example, you can go into the futures market or buy some of these ETFs that are backed with silver. And if you have a long contract, you would know this quite well, Andy. I'm assuming you can simply buy the long contract, wait for it to mature, and stand for delivery and say, I want my bars, my 1,000-ounce bars. If you hold an ETF and there are minimums, but these minimums are nothing for these kinds of companies, say $500,000, $1 million or more, they can hold the units in these ETFs and just, contact the issuer and say, okay, I have X amount of units in this ETF. You're supposed to have the silver to back it. I want delivery. I'm entitled to physical delivery. So that's why I believe, in part, we've seen these ETFs see their physical silver being drained over the last few years to the tune, at least in the exchanges, of about 40% from their peaks of about 3 or 4 years ago, and in some cases more. So I believe that has fed this deficit. And again, nobody knows for sure how much there may be of these are what I call secondary silver supplies. Nobody knows for sure how much, but we know, according to the Silver Institute, the last 3 years is already 500 million ounces of silver that has been fed this way. How much longer can this go on? A year, a couple of years? I don't think much beyond that. But when you get, and I think I'm referring to what you were saying before, during COVID, these large manufacturers, they got their silver. They were able to continue business as usual. When you get someone like that for some reason cannot get the silver that they need, they're going to scream. Yep. And the market will hear them, and all bets will be off. And that will be quite the trigger point for an upward spike in silver, and that's not even considering what can happen under recession, under a spike in the gold price, where silver will typically follow. There are all kinds of potential triggers out there. Again, people should be aware of their recency bias. It could do you in. It really could.
One final thought. The current US sound money movement. Now that is really making gold and silver money again. So what's your thoughts on that?
I think, kudos to them. They're doing something that is very laudable. They are going, state by state in the U.S. and lobbying to have taxes removed from the purchase of typically small amounts of physical gold and silver. And their arguments are fantastic. People are not buying this to trade. They're buying this to invest. They're buying this to protect their purchasing power. They're typically buying small amounts. These are not so much considered investments as they are considered wealth preservation.
Yes.
And you could, it's almost like saying, well, I have the choice. I'm going to keep this dollar, or I'm going to instead use this dollar to buy another form of money, gold or silver coins, for example. The dollar isn't itself taxed unless you look at inflation. So if you ignore inflation officially, it's not taxed. Why should gold or silver be taxed? It doesn't make sense. And then you also have issues between states, where if in one state it's taxed and in a neighboring state it's not taxed, then these shows or these conferences where bullion dealers, for example, are selling physical gold and silver, will choose to do their conferences in the states where it's not taxed, because obviously people can easily drive across the border, go to the state where it's not taxed, make the purchase, and bring it home. So it's unfair, and it's just as I say, it's a laudable movement. They're making fantastic progress. I think that it's a genuine, fair way to approach this. And there's been some interesting, and I talk about this also in the book, there's been some interesting developments in Idaho, for example, where the state legislator has looked at not only removing taxes on silver and gold in their case, but to allow the Treasury in the in Idaho, to be themselves allowed to invest in physical gold and silver. And they've got just the most logical arguments saying, our laws are telling us that we can only invest in safe things like treasuries or maybe state bonds or federal bonds, which clearly have lost lots of value because of inflation. And if you look at what happened in bonds in 2002, I mean, it was just devastation in many investment portfolios because the safe investment was no longer safe. Bonds, were completely trashed because of rapidly rising inflation. So, they're making some good headway with that as well, to allow the Treasury, the state Treasury, to buy physical gold and silver as a hedge and as inflation protection. It's only fair for citizens and people living in that state. Again, fantastic things, fantastic development. I'm really impressed by the work. It's the Sound Money Defense League that's spearheading all of this work. They're doing great work, and hats off to them. It's true fairness in investing and in wealth protection. Good for them. I hope that they make a lot more inroads.
Peter, we have the wind at our backs. Everything we've talked about here today, I hope people take note, because these are the action points where someone has to make a decision. We have to make decisions every single day, and money is an important part of the decisions we make. So here's some information, guys. I would honestly suggest dropping in on Peter's website, finding out what he's got going. Clearly a specialist, illuminating discussion today. Peter, thank you so much for joining us. I really did appreciate your insightful look at all of the things related to silver.
Well, Andy, thank you so much for the opportunity to speak to your viewers and to give my insights. It's obviously what I love to do and what I do day in, day out, all day long. And I hope that, my passion for silver comes through. And I do believe it's a generational opportunity. The book really is the best way to get an overview of that opportunity. And I like to say that the book is the intro to the world of silver, and then my newsletter, Silver Stock Investor, really is the real-time way to follow the events and what's going on in the silver space, because that's something that I publish twice a month, and then as well additional alerts when warranted. So that's what I do.
Well, thank you, Peter. And as I say, I do really invite people to or request honestly that people should who are exposed to our world, the gold and silver world, should drop in on you. But thank you so much.
Thank you again.
All right. Thank you, Andrew Maguire and Peter Krauth, for another fascinating discussion. And what I wanted to say is make sure, as Andy always says, buy physical, make sure it's backed 1-to-1, and understand the difference between what Andy calls the casino paper gold and silver markets and the actual physical gold and silver markets. They're not the same. Don't be fooled. And there you have it, ladies and gentlemen. That's all we have for you on another fascinating episode of Live from the Vault. Please help keep spreading the word about this channel by hitting that like button there if you haven't already done it. Share this information. It really helps the channel, and hit the subscribe button if you're not already subscribed to Live from the Vault. And if you click on the bell right there, we will notify you in real time as each episode goes live. And with that, we will see you right here on Live from the Vault next time. Bye for now.